Welcome to another KE Report webinar featuring Kuya Silver. I'm your host, Corey Fleck, your host over at the KE Report website and podcast, where we cover daily market moves as well as company updates, such as companies like Kuya Silver. This webinar is produced in conjunction with Focus Communications. Kuya Silver is traded on the CSE under the symbol KUYA, on the OTCQB under the symbol KUYAF, and on the Frankfurt Exchange under the symbol 6MR1. I'm joined by David Stein, President and CEO, as well as Christian Aramayo, the Chief Operating Officer at Kuya Silver. Now, this webinar focused on the move into production at the Bethania project. I thank all of you for already sending in some questions to me. For everyone tuning in live, you also have the ability to ask questions throughout this webinar by using this webinar software, either the chat function or the Q&A function. I'll be monitoring those throughout this webinar and interjecting questions here and there as both David and Christian present on this move into production. We're going to give the room a little bit of time to populate here as all of you are just tuning in. We thank you for all taking time with us to learn a bit more about the Kuya Silver story. There will be a recording made available for this webinar, so if you miss anything, you'll be able to recap all of that. Now, I know a lot of you want to know about financial metrics like costs, cash flow numbers. We'll get into as much of this as possible and as much as the company can disclose, as they are, again, just moving into production here. So David, Christian, thank you very much for joining us. I'll hand the floor over to you. You guys can kick us off.
Thanks, Corey. Our pleasure to be here. We haven't done one of these in a while, and I think it's a great forum to both to give investors that know us a chance to update them. And also, I think we've got a lot of new people online today as well. So very, very pleased to see that. So I'll start and go through a bit of the intro, the overview of the company. And then I'll hand it over to Christian to do more of a bit of a detailed presentation on the mine operations right now. And then I'll kind of wrap it up at the end with some comments on exploration, which is, extremely exciting. And we've made announcements on both the mine operations and exploration just in the past week. So we'll be able to, bring everybody up to current, up to present day on all of those various items. So let's get started. Before we do, we've got our notices here. We are going to say a lot of forward-looking statements, and so please take a look at your leisure. You can read over this statement. It's on our website. We do put our presentations on our website. Very easy to find, kuyasilver.com. So you can read all this information. And with that, let's get started. So we've got two big silver projects, and we're going to mostly be talking about Bethania today, almost exclusively, but we do have our Silver Kings project in Northern Ontario as well, in the historic Cobalt, Ontario silver mining camp. But what we like and our strategy is these high-grade silver districts, and to find projects and properties that have the potential to go into production, and also get a commanding land package so that we can grow through exploration and, ultimately kind of a hub and spoke production model as well, with multiple mines feeding a centralized plant. That's something that the silver business seems to work very well in the silver business, because so many silver mines are these high-grade veins like what we have in Peru. One thing we like to really emphasize with investors is the fact that we we are able to do, development and increase production, which is the yellow line at the bottom, as well as doing exploration. Exploration is very important. And as most of you know, many of you know, the vast majority of junior mining or metals companies out there, they only do exploration. And the problem with that is that there's sort of no light in the end of the tunnel in terms of generating your own cash flow. So that one day, you don't need to keep going back to investors and issuing more shares. So we feel like our strategy is better. It works especially well in the silver business, where you can start up mines without a lot of capital, and that's exactly what we're doing with Bethania. So you can see, the various stops along the way, including what we've already done and what we're about to do here in the next few months and years. Every stop that we take here adds value to our shareholders, whether it be expanding our resources through exploration at Bethania, drilling our second project, Silver Kings, or most importantly, and what we're going to talk mostly about today, is the development of the Bethania mine, getting it into production, and then growing production from that initial state. All right, now let's focus in on Bethania. We really, since the very beginning, in fact, since before we went public, we've been taking, this approach to building Bethania and really building a company, a mining company. And it just so happens that Bethania is our first and our flagship asset. But there's sort of a model that many other companies have done before us. We're not inventing it. And it works very well. And it works especially well with high-grade vein deposits, whether it be gold or silver. And that's exactly what we're embarking on now. We're kind of, pretty much done phase one here, just getting into production now. And that's the big de-risking factor, where you go from, not having any production, not really knowing what you're doing, to being in production, developing that expertise, training your people, getting all the permits. That all needs to be done first. So we're basically at the tail end of that journey now, and we're about to, start production. Once you get into, kind of a steady state production, then the next big growth factor for you is going to be to start reinvesting in exploration. And by doing that, you're now building, the next expansion of the mine, or a longer mine life, or both. And so that's something that we'll, look forward to do in the coming months and years from now, after we're, more complete on the Bethania ramp up. We'll start to get more aggressive on exploration. And, at Bethania, we are very blessed with so many targets to drill, so much low-hanging fruit to go after. There's no question in my mind that Bethania is going to be a lot bigger. It's just a matter of time and money to go out and do all that exploration work. Once you have the bigger resource, then you can go back now and kind of redesign your mine. Now we can make it bigger and increase production. And you can do so organically. And what's really nice is even if there's some expense to expanding your plant, even if there's some time that it takes to permit that, you'll be making money the whole time. It's not like you have to sort of sit there and burn cash and wait for that to happen. We'll be continually making money. If it takes 12 months, if it takes 18 months to expand, we'll be making money the whole time. And that's obviously a much better position for shareholders to be in than, the other position. And then once the mine is expanded to the point where, you're happy with it, then you go with what I call phase 4, which is the repetition phase. So now we're going to take that success and repeat it, either at the same asset by doing more exploration and doing another expansion, or it could be a second mine. In our case, we've obviously got one in the pipeline already, Silver Kings. Not ready to go into production today, not even next year, but several years from now, it could be. So that's really the model that we're following, and there's many successful companies that have done things just exactly this.
David, if you could just elaborate a little bit more on that point 3, that whole expanding of the mine and production there. What sort of metrics make you move ahead with that? Is it production levels? Is it cash flow levels? Is it simply cash in the bank? What sort of things push you into that third phase?
Okay, well, for us, what the third phase will look like is we'll already be producing at 350 tons per day steady state. We'll have done some exploration, and expanded our resource. And now we'll be looking at, okay, at what point do we want to go beyond 350 tons per day? And, the great thing about the Bethania project is it's quite flexible. So, for example, if we wanted to double production, we would look at doing basically a duplicate circuit to our plant. If we wanted to go something even bigger than that, we would do probably the same design, but just make the equipment bigger. If we want to do a smaller expansion, we could potentially do a blend of toll milling and our own plant, processing at our own plant. So we've actually got a number of different options for us, to do anything from, a small expansion, let's say 350 to 500 tons per day, to a bigger expansion, maybe as much as 1,000 tons per day, which I think would be a good longer-term goal for us to get to 1,000 tons per day. Now, what that will look like is we'll be obviously monitoring our resource as we drill and as we expand. I think for a high-grade vein mine, you don't really want to be any more than 10 years of mine life, I think. Because, as we know, it's very highly likely that we'll keep finding more, whether we're extending the veins at depth or finding new veins along strike or in different zones in the case of Bethania. So I think, at some stage, if we get to 30 million ounces, let's say, then we want to be designing a plant that will have the throughput to produce at least 3 million ounces a year, maybe more, right? We get to 50 million ounces, we want to do probably 5 million ounces plus a year. And that's, to me, that's a good kind of ratio to aim for. Right now we're at 14 million ounces, and we're going to be, doing about 1/10 of that annually, maybe a little less. But that's what we've designed to start off with.
Okay. When it comes to phase 1 and 2 here, just a quick question. You're in phase 1 right now. Do you do phase 1 and 2 together?
Right, we're not doing phase 1 and 2 together. Is there a circumstance where you would? Yes. If we were in a rip-roaring bull market where access to capital was really easy, and we were well funded, and we had a market cap that was 10 times the size of what we have today, 5 to 10 times the size, then I could see us doing 1 and 2 at the same time, basically concurrently. But instead, we'll be doing them more consecutively because we're really looking at conserving capital, building up a cash position with our mine operations before we start, moving aggressively more into exploration.
Okay, thanks.
But obviously, that's something that can also change as the market develops, as well.
Fair enough. Access to capital, like you said, yeah. Right? Need capital to move forward with, especially with the exploration.
Okay, I'll try and speed up because I spent a lot of time on that slide, but here's where we're located. Lima, you can see where I'm pointing. Huancayo is a big city that's very close to the mine, about 500,000 people. We've got road access to the mine. We're in this belt of silver, lead, zinc mines. There's even more to the north and south of this belt as well. Just put some ones that are closer to us on the map, and that's we're in a great part of Peru, central Peru. Again, lots of access to decent infrastructure. Here's our land package. I think this is really important. Now, we'll talk more about exploration later, but it's really important to demonstrate that, this project is so much more than just the Bethania mine itself. If you want to just kind of see the footprint of the Bethania mine, it's right here. That's supposed to be a rectangle, but it's basically right there. And then, all the other red lines on here, and including this expansion to the east here, that's all additional stuff that we have not drilled yet, that we know is there because of our mapping and our surface sampling that we've done over the years. And so we've been able to methodically put together this land package. It currently is about 4,300 hectares around the mine. The actual surface area of what is the mine today and our resource today is probably about 15 or 20 hectares, okay, out of over 4,000 that we have to explore. So that's just to emphasize that we really have a huge district here, and we're not just like saying that out of hyperbole. We're proving it every time we go into the field. We find more veins, we find more mineralized systems, and we're able to make this project a lot bigger in terms of the geological footprint. All right, here's our resource model. Again, for those who are unfamiliar, when we did our drill program back in 2021, we really focused around the mine workings because we wanted to build a 3D model that we could then go in and build a mine plan around. So we did exactly that. We did, quite a bit of drilling in this area, small area here. That got us our measured and indicated indicated and inferred resources, which then we built our mine plan around. And here's our resource. So you've got about 6 million ounces equivalent indicated and 8.3 inferred. Most of that is actually silver, metallic silver. This is a real primary silver deposit. About 70 to 75% of the value is in actual silver, and the rest of it will be in other metals, including lead, zinc, copper, and gold. But it is important. There are very few primary silver deposits out there. Even some of the ones that market themselves as silver are often mostly gold or mostly zinc. This is a real silver deposit. We had so many vein systems when we did our resource that we ended up subdividing our resource into 3 vein systems, we call them. So that's Española, Doce de Mayo, Victoria. And what this is these are major mineralized structures that run basically east-west through the property. So they're all sub-parallel. Victoria does kind of crisscross over Doce de Mayo, but they're all more or less going in the same direction. And then they have branches and splays that kind of come off of them in various parts. And so that's what makes up our resource. About half of it is above the mine workings and half of it is immediately below. And everything is open at depth. And we've done very little drilling at depth so far, very little shallow drilling, or very little drilling, deep drilling, I should say. So between those 3 vein systems, they're modeled to a depth of between 180 and 230 meters, depending on which vein system. And these types of intermediate sulfidation systems can go hundreds and hundreds of meters deeper, 500 meters, 700 meters, a kilometer even. There are some examples of in Latin America. So this has got a lot of potential to go a lot deeper, and that's probably the easiest thing for us to do to grow our resources, is to just drill deeper. Just drill right here where the resource is and keep going at depth. We got great results in our last drill program at the bottom levels of the mine. But we do have a lot of other targets as well, including on the other side of the hill, where we got the hilltop zone, We've mapped and sampled a whole cluster of veins over there, some of which have very, very high grades at surface. So that's likely going to meet up with the main Bethania system. We haven't done enough drilling to kind of figure out how that all works yet, but it's so close, it's got to be all one system, really. And it's just a matter of now doing a lot more drilling on the property, especially off to the east, to basically extend the strike length. So that's another low-hanging fruit target for us. And we haven't even left the property yet, the original mine concession. So that's kind of the resource. Again, we'll come back to that later when we talk more about exploration, but let's turn it over to Christian now and talk about the mine development.
Okay. Hello, everybody. For us, this is a very exciting moment to be talking to you for the first time of what we have been doing in the mine, what we have been accomplishing since we started the company until this year that we launched our reconditioning program for the underground facilities and infrastructure at Bethania Mine. So I would like to give you first a big overview of what happened, and then we will drill down into the details. So in terms of development, Kuya completed the first tranche of strategic investment from Trafigura that include the offtake agreements that are already agreed with Trafigura in terms of the quantities terms. Then we also completed the 3.5 million placement in December 2023, and since then we had continued working towards the start of production. And once we started the reconditioning and the development, we also started the improvement on the surface infrastructure that will allow us to have a feasible and viable operation very soon. As you will see here, we are targeting to start production and toll milling, basically mine production and then toll milling by half of this year. So we will begin with a toll milling operation as per the base case, the alternative case that is explained in the PEA as well. And how we are going to do this? We are going to start with a 1,000 ton batches from the mine to the process plant, and then we are going to ramp it up until the 350 tons per day target that we have. Our plan and the target is that we will get to 350 in 12 months. The reconditioning at Bethania Mine had been going very well. We are very happy with all the team, and everybody's excited working in this task. We have accomplished an outstanding 550 meters fully reconditioned, 70% of them in 12 de Mayo. And we have been working the decline that will be the first area that we will target for production. So we are very happy with the team. There have been challenges that we have been all brainstorming how to solve it. And now I will in a while, I will show you some more where we are and what we have been accomplishing. We are still keeping the same all-in sustaining costs that we have in the PA for the first 16 months. We have an average head grade of 13.8. However, as you know, in this narrow vein system, we are confident that this is an average. We are going to go above it. And the silver production is as expected in terms of ounces. So once we get to 350 tons per day. So let me give you an update that shows the progress that we have been doing in terms of meters, okay, week by week, and then how do we plan to end in the very, very near future. Right now we are here at this point at 591 meters rehabilitated until Monday. So the first stope that we will start working is in level 640 in Española vein. This level will be the first one that we start production. We targeted, as I said, half of the year, but very soon after that, we started with the development of the level 670 in Victoria. For the ones that are familiar with Bethania, you will know that we have two basically directions or branches. One goes towards Española, the other goes through 12 de Mayo. So we get to Española first, but we are very happy that we are now arrived to the intersection with Victoria. 30 meters after we accomplish the first stop at 640, we are going to start going up in the mine race and continue to open our second stop. Our second stop will be in the race at 640, still in Española, okay? And this will allow us to have the 640 and the 640 race both in Española, and we will get very close to being on production at Victoria. Later, we are going to start the strategic crossing to 12 de Mayo, okay, also at the same level, and we are going to start with our third stop. The third stop will still be in Española vein, but at the same time, we will launch the first stop in a vein that is different from Española, Victoria. Then, as you will see, 3 months after we started the first stop, we will start the fifth stop at the 12 de Mayo. So we plan to have all these, okay? And the good thing is that the progress, this line here, for the guys who are following the progress, you will know that we are expecting the production to continue and then improve, because once we start opening the stove, we're going to have production and rehabilitation at the same time until we get to this point where we have 5 stoves operationally. And more important, the 3 main vein systems that David described will be mined. One of the main challenge, okay, nowadays has been headcount, basically attracting personnel to work outside. This has been worldwide. It's not a problem specific to Bethania. It's not a problem specific to anybody. All of you guys who follow mining should know that it's less attractive every time. So we are glad to report that we have successfully been able to meet our headcount requirement. Right now we have 47 persons. So we have ramped up very fast. For that, we have improved our accommodation facilities. We have very nice accommodations up there, and now we're also working with the community to have extra accommodations with the community as part of our commitments, so we can continue the ramp up towards production. We think that all this curve until week 11 has helped us to prepare logistically, okay, and in terms of service, how we are going to start catering for more people, more shifts, and more basically level of activity at site, because we are going to have the reconditioning and production at the same time, what is really good. So let me show you in terms of the geologically how we are going to start production. This is the Española vein. We have the cross section here, and this dotted line, black dotted line, is decline. So we had already rehabilitated the decline, and we are going to get to this point. The yellow star marks the first stope that we are going to be exploiting at Española vein. And this stope, okay, will be only 30 meters away from the second stope that is going up the race still in Española vein. With that race, that help us logistically, but also in terms of it helps us in terms of ventilation. It helps us in terms of operational capabilities, material handling. So this is a very strategic milestone that we need to accomplish. Let's go into details now how the first stop will look. That picture that you can see on your right shows the wall that we are going to mine. So as we are going to use an ascending cut at field method, we are going to basically cut a diagonal, okay? To simplify it, I will draw here. We are going to cut a diagonal here, and the stop will be in this direction, and perpendicular to the screen, we are going to continue the development. Where does this happen? In this area that is that has the red star. So we had already, this is the layout that I was telling you, okay, of this, the main two sections that we have, the one that go to 12 de Mayo and to Española. Española was in better conditions. We have already changed the timbers. We're using timber support, as you can see in the picture. So according to our geotechnical study and stability analysis, Española vein was in better shape than 12 de Mayo. That's why we have 70% meters in 12 de Mayo, but we are going to get to the first stope in Española. The rock quality was as expected, so the RMR has been as expected. The highly fractured rock has been founded as expected. Water flows has been as expected. So that has allowed us to work fast to the first stope, and also that has allowed us to fully stable and dewater the 12 de Mayo entrance. So we will start mining very soon our path towards Victoria vein. If we see the cross section down there, you will see that these red ones, the boxes, are areas that have been historically mined, and now we are going to be here down there. The other 30-meter raise is that one that go up here. We're going to see that in the next slide here. So we will continue through Española going down, and then we are going to go up. The decline will continue to go down, okay, with the same slope, and we are going to go up. The logistical portion at this time is very important. We are going to start, we have a strategy for the material handling using conventional method that will go up to the decline, okay, with the winch up there in the end. Let me draw here. The winch will be here in the entrance, okay? So we're going to have a cycle that we have a horizontal portion at level 640, okay? And then we are going to go up. We plan to have 5 cycles, okay? Out of those 5 cycles, 3 of them will have material and 2 of them will be for service. Meaning we need to, we need to bring timbers, we need to bring tools or waste out, up. So with this cycle, we will be able to get all the material out to this area here, and we are designing a system that will allow us to complete the cycle faster. This same logistical strategy will continue until we get to 100 tons per day. 100 tons per day is the capacity that, let me show you here. So it's the capacity that where the current status continue being good, and then where we need to start making changes in the mining strategy, mine design, mine infrastructure, mining method remain the same. So this is a graph that show the progress in 4 different phases. Phase 1 has been successful, complete. We have already reconditioned the galleries that we require to initiate the process. The decline has been dewatered, fully reconditioned and operational. The mining crews is now operational, and the mine raise that are required for ventilation, because we have ventilation in the 2 levels, where we have natural ventilation, and then we have the compressors that will pump air into the lower levels. Right now, we are in phase 2. Phase 2 will be completed very soon, and we are going to start production at Española vein at 640, as I was explaining you. Then we start with phase 3. Phase 3 is where we enable and activate the 3 vein systems. So with those 3 vein systems at the same time and with the same material handling method, we plan to get to 100 tons per day in the next 7 months. Although we are going to get to 350, okay? Our main challenge is to get to this 100 tons per day. because by that time we need to have everything ready to jump to phase 4. Phase 4 implies upgrading material handling system, meaning more vertical transportation that will mean more platforms, more horsepower as well. The ventilation system will need to be expanded. That will include different fresh air and recirculation infrastructure, and we are going to increase the number of stoves. So from the 5 stoves that we have here, we are going to go all the way to 12 stoves until we get to 350 in month 12. So as you can see, from 0 to 100, it takes us 7 months. But from 100 to 350, the learning curve will have already been flat, will have already been more steep, and we plan to get there faster.
So Christian, that phase 3, that's critical, right? When you're at that phase, that's when you'll have a pretty good handle on numbers, production numbers, a bunch of financial numbers around that time, right?
Yes. For us, phase 3 is critical. Phase 3 is where we are going to have everything ready to make the big jump, let's say. Okay, I know that we are still a small scale mine, okay, in this phase, but for us, this will be critical because we are going to have people working in 3 different fronts, okay, that for a mine like this is like a Swiss watch, basically. We're going to be in a very small way working world class in 3 different fronts with a very well thought material handling system, and continue with the ascending cut and fill method that allow us to optimize the way we are going to mine. Remember that we are going to mine through this ascending cut and fill, and it helps us to get highly selective. It means that it is possible to work with high grade section that with other methods will have been not mined. It will be mainly forgotten there. However, it allows us to get to everywhere, and this method will be carried out will be minimizing the amount of weight that we need to take out, because in these small mines, material handling is one of the main challenges, because the moment you are taking waste, you cannot take ore if you only have 1 or 2 adits, let's say. However, with the method that we are implementing, we minimize that and we maximize the amount of ore that is going up.
Okay, that makes sense. Thank you.
Okay, so and then we start phase 4, that is the ramp up.
Yes. Okay,
so then now it's for David will explain you about the
exploration upside. We want to hear about blue sky exploration upside here, so I'm sure we'll get into that. But let's go on the exploration side of things.
Okay, thanks. Look, this is really important because obviously getting into production and getting up to 350 tons per day over the next year would be a massive achievement for the company. We believe, I know there's some questions about this, we'll be making a lot of money at that rate. But nevertheless, we see this as being a much larger operation, 3+ years down the road. And of course, how we're going to get there, we need to demonstrate exploration, and we are, but I'll show you, that there's a lot more we can do. So we start again on the original mine property here. So this is the Bethania property in long section. Currently, the entire mine, the entire resource is just in this block here. Now, keep in mind that there's been several million ounces mined out of here already by previous owners. And then on top of that, even after our resource estimate, we've actually found some new veins in this area, in this block, that we didn't know about, and so we didn't drill them. like for example the Carmen vein, which I put on the slide. So there, this is, our resource, if you add indicated and inferred together, is 14 million ounces. You add another 3-4 million ounces that's been mined out, add maybe something for the Carmen vein, etc. You've got a block here in this very, very small area that's somewhere, easily between 15 and 20 million ounces of geological endowment. And, it's completely open at depth. Our best holes that we drilled in our program were our deepest. The vein seems to be getting thicker, and the veins seem to be getting thicker and higher grade at depth. And again, if we look at other similar systems to this, they can go hundreds of meters deeper, and we don't seem to have any, shallow structures at depth that would cut us off either. At least based on our knowledge to date. So it's looking very good here that this could at least double at depth, and that's without even looking at the along strike portion here. Now the along strike portion is very interesting as well, because we've got so many veins just over here, not that far away from the mine, about 500 meters. Another cluster of veins here, structurally controlled and related to the Bethania mine structures themselves. We have no resources here. We've done quite a bit of surface sampling, but we need to do a lot more work there. There was a little mine in here as well, actually, an artisanal mine we know about called Española dos, but we never went in to it. We haven't done anything with that. But we know someone at some point in the last 50 years did produce here. So this is the mine property. If you look at 15 to 20 million ounces of potential here, no guarantees. You look at the doubling at depth and then doubling again along strike. You could have a much larger system here without even leaving the original Bethania mine property. And just to be clear, even though we've got very, very exciting discoveries and prospects on some of the satellite zones, this is our top priority. This is where the low-hanging fruit is. This is where we can add a lot of ounces very cheaply once we do get the drills turning again.
How much more work is needed to bring those up to drill-ready status then?
Well, but this is the Bethania mine targets are drill ready. I mean, like, for example, to drill the depth potential, we'll probably have to look at building in some infrastructure underground to drill, and then drilling from underground, for example. That would be an obvious thing to do. That way we can get, deeper without having to drill really long holes from surface. But,
what about the targets along strike? What about those?
And then we would drill those from surface.
Yes, but are those ready to be drilled then?
Yes, they are ready. Yeah, okay. We've mapped the veins at surface. There's almost nothing more we can do other than drill them.
Okay. Do you need permits? You have permits for that.
Look, we're not looking at doing any drilling right now. It's more of a budget issue than a permitting issue. Okay. But as we start generating cash flow from the mine, then we'll start siphoning some of that off to do more exploration. And so that's an important part of our organic growth strategy that, allows us to look at, doing this drilling as we start making more and more money from the mine.
Okay.
Now, stepping back from the Bethania property itself, that map that I showed you was just the mine property in the lower right-hand corner here. We do have the two other zones, Carmelitas Norte, off to the west here. And, we've done a fair bit of sampling, surface sampling there. If you stacked those, they appear to be parts of two parallel structures that go to the northeast. But if you stack them, together alongside, they'd be about 1.1 kilometers long, the strike length, which is actually very similar to Bethania. So, we potentially could have another Bethania over here, and then even more recently, we announced just last week this Tito target, or actually, it was earlier this week. Sorry, it's so fresh. The Tito target, and this is something that was noted in the literature, government literature. Just as a dot on the map. Really, we didn't really know much about it. Our geologists went and did a really nice comprehensive field program in February. Really visited a whole bunch of the areas on the property, but ended up focusing quite a lot of attention on this target. And you can see we traced a vein, a single vein, more than 600 meters, taking samples along the way, many of which were over 1,000 grams per ton equivalent, silver equivalent, with very high silver, but some high byproduct metals as well. And again, if you want to sort of compare that to what we have at Bethania, that's actually longer than the strike length of the whole Bethania mine, a little bit longer. And you can see we found these other structures that kind of branch off, and then there's a few more off to the west. If you look off to the west here, you're looking now at a multi-kilometer structure here, between these parallel veins or faults, mineralized faults that are probably all related to each other in the same mineralizing system. So this is looking like a really exciting prospect for us. I would say, I would say that this probably jumps the queue in terms of our targets for future exploration. Not to displace the Bethania mine, but I think it would come right after, because the grades we're seeing here are among the highest that we've seen anywhere in the property, and it's also very close to Bethania. So it's a really, really nice target. We're super excited about it. And honestly, this is almost as new to me as it is to you, because we just got the data a few days ago. So, wrapping up here, I think, Bethania is perfectly positioned on the Lassonde curve to generate a lot of value here in the coming months. This sort of final phase on the Lassonde curve, which sort of tracks a mining stock over its life, is really important, because this is the time when you go from being a cash flow or cash burning junior company to a cash flow positive company, where now you've got cash flow to allocate to drilling, to in our case we want to build a mill, maybe even beyond that we look at dividends and buybacks. Those are just simply not options when you're not making any money. So that's why a company becomes so much more valuable once they get that first mine into production, and that's where we're at.
Cash flow, that's what everybody wants. Hey, David, that's what everyone's been asking about too.
Yeah, well, especially after such a really tough bear market. All right, so here's our cap structure, just updated for während closings and stuff like that. So we're sitting at about 40 million market cap, with Trafigura now entering as a large shareholder, 6.5%.
Okay. Time to get into some Q&A. Oh, let's do quick management team then.
Management team. I'm not going to say anything about this, just to show this to people online. Great team. You've heard from two of us today, but everybody on here is worth talking to if you have the opportunity. And we'll just leave it there. This is on our website if you want to look at people's bios in more detail. And that's it.
Okay. Hey, thank you, David. Let's get into some of these questions. And I think we need to start off with some of the financial questions here in terms of margins. What sort of margins can be expected here at Bethania?
Yeah, I think the best way to answer that is to go back to our PEA and then talk about what's going to change. And if we go back to our PEA, once we get into kind of steady state production, our all-in sustaining costs would be we're estimated at in sort of the $10 to $12 range, depending on the year and the grade, etc. In that sort of range. Now, when we start toll milling, that's going to add another $2 to $3 per ounce, just for the additional cost for the trucking and the milling fee. So, you're still looking at something that should be under $15 all in. And if we're selling the silver at 27, 28, obviously there's a pretty healthy margin there.
Okay. That kind of ties into break evens then too, in terms of silver price and volumes, more around, I guess, the volume side of things. Can you give us some insights on what the break even might be?
Sure. I mean, one thing to keep in mind is that, as you ramp up production, there are always going to be some fixed costs. And so as you ramp up production, you can divide those fixed costs by more tons and more ounces. And so, your all-in sustaining costs, if you just look at it like a month or a quarter basis, is going to start really high, and then it's going to come down to whatever that steady state is that we just talked about. So, given the margin though that we do have, which is pretty big, I would expect that we'll be cash flow positive very quickly within a few months. Exactly what month I can't really say, but certainly it won't be. We don't have to fully ramp up the mine, but to make money. As I said, by then we'll be making almost 50% margin at that point. So we'll start turning a profit way before that.
Okay, yeah, because that was a question. Will you be cash flow positive by the end of the year? Sounds like you might be.
Yeah, we think we've got a good shot at that for sure.
Okay.
Yeah, absolutely.
Question regarding this Trafigura offtake. Is the agreement based on future spot prices? In essence, I think what this question is getting at is how much upside does Kuya have in terms of this Trafigura offtake to higher silver prices?
I mean, we basically have full exposure to higher silver prices. The offtake terms are going to be based on global benchmarks, and that's really that really addresses more of the cost of how much it costs to sell the material to ultimately to a refiner. But Trafigura is in the middle there, and they need to make their money too as a metals trader. So that's kind of how that works. Is there'll be costs for the treatment costs per ton. There's a refining cost for every ounce of precious metal that you have in your concentrate, and then there are some other calculations that go into that. But basically, that's it. And those rates are fixed based on global benchmarks. So we won't have anything that's sort of any different than really any other bigger miner would have that's selling our same concentrates, which are the two concentrates we're going to be producing. They're literally the most common concentrates that you have outside of the copper business. So because we're not producing a copper concentrate yet, but the silver lead or lead silver concentrate is going to be most of the value of our it's going to be most of our revenue, I should say, just from that concentrate. Probably 85% of our revenue will come from that one concentrate, and that's because we have so much silver. And then we'll produce a zinc concentrate as well. And those two concentrates are it's a kind of a very relatively liquid concentrate market. They're very highly traded all over the world. Lots and lots of smelters need those concentrates in Asia, China, and Europe, etc. So that's kind of how that works.
Okay. Now, are all the sales covered in this offtake agreement, including future production from other nearby deposits like Carmelita?
Look, I mean, we have minimum tonnages that we've committed to for the first several years, and we'll meet those however we need to.
Okay. In terms of that concentrate, then, question regarding some of the new areas to be explored and even new discoveries. Do you see any relevant zinc and lead values potentially in these areas?
Yeah, we get high lead and zinc in pretty much every single sample we take along these veins. And the only variation is that some of these zones seem to be more gold rich or copper rich, and some don't have any gold copper. So the gold copper seems to be quite variable. Like at Carmelitas Norte, we had two samples that we took on a vein that had over 5 grams gold, which is very high for us. I mean, it's a silver vein system, so we don't expect to get multi-gram gold, and we did there. And then we take lots of samples that have no gold. So, but we almost always have high lead and zinc in these silver veins. And it's just a matter of how much.
Okay. Question on funds then. Do you have to raise any additional funds before you become operational, start cash flowing?
Our plan at the moment is that we don't. And, obviously, we think we've got a nice cash position right now. And, there's always, I suppose things can go wrong, but we're working very hard to make sure they don't.
Okay. Now, in, I guess, a reasonable, not over-promising here, but people are wondering when exploration drilling could start. I know you're focused on building the mine here, getting cash flow positive. When could exploration drilling reasonably start, though?
I think realistically, if we look at just doing it from mine cash flow, you're looking at early 2025. Okay. By then, we should be making enough money from the mine that we can put aside a few $100,000, $500,000 a month, something like that, and start just doing basically drilling every month. Just keep the drills turning forever at that point. But I honestly, unless we get either a really hot silver price market, that could obviously, because our cash flows are related to the silver price, so that could bring it up by a few months if we get a higher silver price. So that would be the caveat there.
Okay, but still, that ties back into that other question where you do still have the upside of a rising silver price environment. Let's talk more broadly about Peru here. Any changes in geopolitical risks in Peru?
Well, I mean, Christian's here. He can talk about it.
Christian, let's hear from you.
Yeah, I think I can talk about that. It's important. I think it's important to know that in Peru, let's say in 2023, had been in a decline a little bit in terms of economics, 0.6%. Okay, but as Moody's was saying as well, it has been showing great signs of dynamism at the beginning of this year, 2024, because it has proven to be politically stable regardless of the situations that have been happening in the whole region. I wouldn't focus on Peru only. So our current experience annual growth is 1.4%, and this is important. That's according to Peruvian Economic Institute. But it's important that the public investment is increasing, the external investment is also increasing, and Peru has set up to facilitate and make it easier the mining permits, commodity, like any kind of natural resource permits and regulations, not to relax them, but to make it more straightforward. That has made a huge success. Like last week, at the beginning of this week, we heard about Anglo American and Quellaveco getting their water permit. That's a great sign that the south of Peru, that was where the focus of any kind of social problem was located, is now fully operational, rehabilitated. Where we are located, we're in central Peru, a very pro-mining area, and overall, I don't see any kind of risk, only improvements.
Okay. Hey, guys, thank you very much for your time here. We've run through all these questions. We are at our time limit for this webinar. I hope all of you tuning in have found this valuable. This is a big stepping stone for the company moving into production. I could tell by how focused a lot of you were on the economics around here, some of the financial data. We're going to be watching closely as some more news comes out and as some financial metrics come out as this Bethania project starts cash flowing for the company. So David, Christian, thank you very much for taking time putting together this presentation and addressing all of these questions. If you have any more questions, you can email the team. You see that email address there. You can also email me personally, fleck@kereport.com, and I'll get the Kuya Silver team to address those. So David, Christian, thank you for joining us, everybody. Thanks for tuning into this webinar.
Thank you.
Thank you. Bye.
Bye.